PSAF says the purpose of this is to protest, the purpose of this protest, is to deliver a memorandum of grievances to the premiers of each province. They are demanding protection for KwaZulu-Natal Provincial Commissioner Lieutenant General Nhlanhla Mkhwanazi, who made explosive allegations against Police Minister Senzo Mchunu and Deputy National Commissioner Shadrack Sibia. PSAF National Chairperson Faith Mabusele.
We also will be addressing the issue of the president announcing that he is setting up a commission, which as a Put Africa First and the citizens of South Africa are against. We will be addressing all of those issues at all of our premier's office in 9 provinces.
The Ethiopian security services say they've arrested dozens of members of the Islamic State group in various locations across the country, including in the capital Addis Ababa. They said those arrested had been recruited to carry out terrorist activities in Ethiopia. The BBC's Will Ross has the story.
Ethiopia has for years deployed troops to neighbouring Somalia to fight the Al-Qaeda-linked Al-Shabaab. Now, officials in Addis Ababa are reporting a breakthrough against the Islamic State group. They say 82 members recruited in Somalia were arrested across the country, including the Amhara and Oromia regions. The US military is worried about the growing threat of Islamic State in Africa and in February carried out airstrikes in Somalia's Puntland region. Officials there say IS Somalia has recruited many Ethiopian migrants in the port city of Bosaso whilst they're trying to emigrate to Gulf states.
The Ghana Tertiary Education Commission's decision to purge people who have unearned PhD titles, this includes some leaders in government, has been welcomed. This comes as vice-chancellors of technical universities of Ghana have expressed concern over the growing trend of academic title fraud. They have described it as a serious threat to the integrity of Ghana's tertiary education system. Channel Africa's correspondent in Ghana, Eric Mawena Egbeta.
This latest action being taken by the Ghana Tertiary Education Council is receiving a lot of support from the vice chancellors of universities, from lecturers, and then from education think tanks as well, who are all backing the Ghana Tertiary Education Council in their quest to sweep or weed out persons in government, persons in very prestigious positions as well, all going about their business, alluding to having received some doctorate degrees from universities outside of the country.
Social media law expert in South Africa, Emma Sadlier, has urged parents to monitor their children's activities on social media platforms, particularly on WhatsApp. This after the Gauteng High Court on Monday ordered Meta platforms to shut down anonymous Instagram accounts and WhatsApp channels distributing graphic child pornography, including South African school children. Sadlier, the director of the digital law company, turned to the court on an urgent basis when they became aware of the explicit content involving children on Instagram and WhatsApp. According to Sadlier, the explicit pornographic photos and videos frequently include additional details about the child depicted, such as their name, grade, and school.
I really urge every parent listening to go and look at their child's WhatsApp account and go through if they are following any channels. All the rules around digital hygiene, looking after children, knowing what they're up to, making sure that young children are not on social media, and very, very dangerous is this idea that WhatsApp is not social media. What we're seeing is that WhatsApp is not just social media, it's actually more dangerous than the other platforms because of these huge channels and because there's just zero accountability. No person identified on any of the platforms, and they're just doing whatever they want to.
The former British Defence Secretary Ben Wallace says he makes no apology for using an injunction to stop a major data breach being made public. After the leak 3 years ago, thousands of Afghans at risk from the Taliban were secretly moved to the UK, with more to follow. The BBC's Harry Farley has the story.
Sir Ben Wallace defends the super injunction that prevented the leak from being reported for nearly 2 years. This was not, as some are childishly trying to claim, a cover-up, he writes, adding his priority was to protect all those who might be at risk. The gagging order meant Parliament was not informed, and scrutiny of the programme to bring Afghans to the UK was impossible. But there are questions about why this injunction was in place for so long under both the previous Conservative and current Labour government. The Defence Secretary, John Healey, said he was deeply uncomfortable about the lack of transparency.
Recapping the top story this hour, the Put South Africa First movement plans to hold a national shutdown across all 9 provinces on Friday the 18th. The movement says the purpose of this protest is to deliver a memorandum of grievances to the premiers of each province. For any news stories you would like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa News, I'm Cholani Tulo Webe.
SABC News. The African Perspective.
In a sports headline, the South African Sports Minister has tabled his budget for the 2025-2026 financial year. And MLS players get pay boost from Club World Cup prize money. I'll be back with these and other stories at the bottom of the hour.
Africa in Business on Channel Africa.
It is exactly 7 minutes after 4 p.m. Central African time. A very good afternoon to you, Africa. A lot in store for you coming up today. We will be taking a look at South Africa's retail sector, which continued to show strength in the month of May, with sales rising by 4.2% year on year. A look as well at electric aircrafts that are being received by Ethiopian Airlines for next year. We'll focus on the pros and cons of this move, as well as other strides that have been made in the aviation industry to start diversifying and not just rely on the fuel-based propulsion system which is currently being used. Also, we'll take a look at the analytics of risk analysis as far as riots in the country are concerned. We'll take a look at efforts that South Africa is making in trying to ensure that businesses and communities do not suffer this financial fallout due to riots and strikes. All this and a whole lot more coming up for you on Africa in Business this afternoon. Here's a reminder for you to interact with us on the various social media platforms. On X, Instagram and YouTube, you'll find us at Channel Africa 1.
Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
We start here this afternoon with South Africa's retail sector, which continued to show strength in the month of May, with sales rising by 4.2% year on year. 6 out of the 7 retail categories recorded positive growth, with textiles, clothing and general dealers leading the way. Textiles and clothing sales surged by 12.5%, while general dealers saw a 3.6% year-on-year increase. Together, these two segments contributed 3.7 percentage points to the overall growth. Channel Africa's business reporter, Innocent Samosa, has...
Retail trade sales increased by 4.2% year-on-year in May 2025. However, the only category to record a decline was food and beverages. Raquel Flores is the Deputy Director for Distributive Trade Statistics.
Food and beverages was the only retail group that was weaker in May, shrinking by 1.9% year-on-year. On a month-on-month basis, seasonally adjusted retail trade sales rose by 0.1% in May 2025 compared with April 2025. This followed a month-to-month increase of 1.1% in April.
Does this growth signal a broader consumer confidence recovery, or could it be driven by once-off factors such as seasonal promotions or inflationary pressures? Dr. Elna Mulman, Head of Microeconomic Research at Standard Bank South Africa, shares insights.
Consumer spending remained reasonably robust in May this year. Retail sales was 6.3% higher than the same time last year. When we adjust for inflation, we also had reasonably strong growth, with 4.2% growth in real retail sales. There are a couple of tailwinds supporting the consumer at this stage. Wage settlements generally remain above inflation, with inflation particularly low over the last couple of months. partly because of lower fuel prices, with consumers benefiting from fuel prices that were nearly 15% lower on a year-on-year basis in May this year.
She says inflation may moderate in the coming months.
Consumers are also benefiting from lower interest rates, and our data suggests that there was a renewed increase in two-part retirement withdrawals in the first part of the new fiscal year. We remain reasonably constructive about the outlook for consumer spending growth in the coming months, but in real or inflation-adjusted terms, it may moderate somewhat given the expected rise in inflation.
While the uptick in retail trade sales offers a positive signal for the economy, questions remain about the sustainability of this growth. With inflation expected to ease in the coming months, all eyes will be on whether consumer confidence holds steady or if this rebound proves short-lived. For Channel Africa News, I am Innocent Samos in Johannesburg.
It is exactly 12 minutes after 4 p.m. Central African Time. This is Africa in Business.
Africa in Business on Channel Africa.
Now, Ethiopian Airlines says it will receive 2 electric aircraft come next year. The airline CEO, Mesfin Tasu, has indicated that the 2 planes are primarily intended for tourism activity and will cover short distances for a round trip within a range of 20 to 50 miles. Now, Ethiopian Airlines is the second company to agree with the company to deploy electric aeroplanes. For more on this, we joined this afternoon on the line by aviation expert, editor and publisher of SA Fire, Guy Leach. Guy, good to have you with us. Welcome to Africa in Business.
Yeah, hi, nice to be with you guys.
Now, when we look at the current technology, or shall I say the most prevalent common technology for aircraft, it's these fuel-based propulsion system. How common are electric aircraft?
They're not common at all. That's an interesting way of starting the interview because they haven't happened yet. So I'm afraid I'm a little bit of a skeptic. But you know what? I think that they're coming, and they're coming sooner than we think. Let me just point out that that Ethiopian is not the first airline to partner with Archer Aviation on these particular what we call EVTOL, which stands for Electric Vertical Takeoff and Landing Planes. These are like helicopters. They're like helicopters, but they've got lots of little propellers rather than one big propeller. United Airlines in the United States has already ordered 10 of them as well. So Ethiopians, got a good model to follow.
How different are these particular models to the ones that are currently being used for training purposes, the ones used for short regional routes? Those, I believe, are also electric aircraft.
Yeah, again, they're not fully fledged. They haven't been certified. They're not actually in practice. The announcements have been that United will start operating these Archer Midnight aircraft this year. I'm personally a little skeptical about that. Ethiopian is at least able to write their own laws, so they can write laws that will enable these aircraft to be certified and approved for next year. So I'm optimistic that they'll get them. I think it's useful to understand, though, that they're small. They're only 4-seater aircraft plus a pilot, so they're more like small helicopters. And I suspect that one of the primary reasons that Ethiopian has ordered them as going ahead with this experiment, because I think it is an experiment, is because it's going ahead with the rebuilding of a massive new airport, which is a whole 45 kilometers away from Addis Ababa. So it's looking for other ways to transport passengers quickly and easily between the city and the new airport.
You spoke there, Guy, about the certification requirements and the regulations and standard that are needed. What are these that would apply specifically to the electrical aircraft? And are they maybe covered under the existing frameworks, or will Ethiopia have to put together completely new regulations?
Well, that's the million-dollar question. I'm afraid I don't have a stock answer to that, because there are, broadly speaking, 2 types of certification or approvals for aircraft. One is experimental, in other words, they're still being developed, and then fully certified by the Federal Aviation Administration. Now, that is a massive task. It normally takes 5 to even 10 years to certify a new design from scratch. And as far as I know, the Archer vertical takeoff and landing aircraft are not being fully certified. So that will probably mean that passengers taking them either for Ethiopian or for United will have to sign some sort of waiver or indemnity to acknowledge that they are flying an experimental aircraft.
One question that really comes to mind the moment we talk about electric aircraft are the logistics of charging stations, for example. What type of infrastructure will be required to operate these aircraft?
Well, fortunately, that stuff is now well established. I mean, we've seen Tesla roll out fast charging stations across the world. So it's not impossible, and these Archer midnight aircraft are able to do 50 to 100 miles. So they will be recharged probably within the space of a half hour to 45 minutes at both destination, at takeoff destination and landing destination. I'm not seeing that as a major obstacle at this stage.
You mentioned the radius of 50 to 100 miles being what these aircraft are able to travel. Could you perhaps highlight for us some of the other risks, the technical limitations perhaps, such as the battery lifespan, weather constraints that these aircraft are likely to face?
Well, absolutely, because although the advertisers will often claim a range figure, those range figures cannot be achieved safely, because you want to make sure that you can land with, let's say, the rules that have been adopted now specify at least 20 minutes reserve. So, it immediately cuts down a lot of that time. Just in case there's a problem with your landing site, for instance, you can't be forced to have to land. So the current requirements would probably require that the batteries may have to be actually changed. Rather than recharge the batteries, you simply move fresh batteries in and take the flatter batteries out. That is one option, depending on how they use them. But honestly, my view at this stage is that they're going to be more of a gimmick. They're going to be more of a sort of an attraction for well-heeled either tourists wanting to get the sights of Addis Ababa, rather than any effective mode of transport.
So there you go, Guy Leach, calling it a gimmick, a very expensive gimmick that's going to cost Ethiopia $30 million. In your view, is the acquisition of these two electric aircraft a value for money for Ethiopian Airlines? And I guess largely because these aircraft are going to be used for tourism purposes. Are you with us, Guy? Looks like we've lost Guy Leach, unfortunately. We'll see if we can get him back, because that's quite a hefty price tag of $30 million for these two electric aircraft. He is of the view that it's very much of a gimmick. And as I commented, if it is indeed a gimmick, it's a very expensive one. And I believe Guy is back with us. Guy, I was just saying to our listeners here that this would be a rather expensive gimmick. Your views, is it a worthwhile investment for Ethiopian Airlines? Are they likely to get value for their money?
Well, will Ethiopian get value for their money? The fact of the matter is that Ethiopian Airlines is a tremendously successful and profitable airline. So, it's got the money to spur on these sort of market-leading innovations. And let me remind you that United Airlines is doing the same thing. So, although it may not be direct returns in terms of ROI and value for money, I certainly think it puts Ethiopian right at the forefront of pioneering and market-leading airlines, in the world, and certainly, obviously, it becomes the market leader in Africa. Let me also point out that, in South Africa, about 25, 30 years ago, there was a regular helicopter service between Sandton and what was then Jan Smuts Airport. That was unfortunately closed down by the regulator, but it would be really great to see electric helicopters, because that's probably really what they are, filling that gap these days. It certainly takes aviation to a new level in terms of convenience, because the biggest problem we have in flying is not the amount of time you spend in the aircraft, it's the amount of time you spend getting to and from the airport and then sitting in waiting lounges.
Oh, no, certainly. I think the bane of many of our existence. But as we wrap up this afternoon, Guy, you spoke about Ethiopian Airline and their pioneering nature. Could success with these initial electric flights perhaps encourage expansion across neighboring countries? Could this be contagious? Should it be a success?
I think it will be. I think that it's still very early days for a battery-powered EVTOL technology. And as batteries continue to develop and as the aircraft become more refined, and indeed, actually, believe it or not, we start heading towards pilotless aircraft for these things, then yes, I think we're going to see them rolled out in a much bigger way across certainly the world, and even across the rest of Africa eventually. But it's still early days yet for this technology. I suspect we're not going to see massive rollout at any scale for the next 5 to 10 years.
A red herring there, Guy Leach, wanting really to get me on the topic of pilotless aircraft. But let's leave that discussion for another day. Guy Leach, always a pleasure. Thank you so much.
My pleasure. Cheers.
Thank you. That's aviation expert, editor and publisher of SA Flyer, Guy Leach. He takes us to 22 minutes after 4 p.m.
Mix Vibration sur Channel Africa.
C'est notre invité du jour, la belle Aïna Mwenze. Elle est là, certaine. L'appelle Boss Lady.
Bonjour Monsieur Jolino.
Parlez-nous un tout petit peu de vous.
Je m'appelle Boss Lady Aïna. Je mets l'accent sur le nom de Boss Lady parce que je mérite cela après le travail fait. Et c'est une rémunération en titre de la personne que je suis devenue aujourd'hui. Épouse et une mère de 4 garçons. Et voilà ce que je peux dire pour l'instant.
Et vous vous êtes lancé dans le business, comment c'est venu?
En tant que mère et se retrouvant dans les pays étrangers, particulièrement en Afrique du Sud, je me disais que laisser les enfants sur la charge des travailleurs ou d'une bonne, ça serait pas très intéressant. Je me suis dit, bon, je dois essayer de m'organiser et trouver un emploi que je peux faire.
Mix Vibration, tous les dimanches de 18h à 19h, temps universel.
Africa in Business on Channel Africa.
Now, analysts say the African Continental Free Trade Area is a bold and transformative initiative with far-reaching implications for Africa's economic integration and industrial development, as it is expected to boost African manufacturing by creating a large single market for goods and services, while at the same time promoting regional value chains and increasing intra-African trade. At the 12th Annual Manufacturing Indaba Conference, panelists unpacked the impact of the African Continental Free Trade Area on manufacturing in Africa. Mabo Buloka spoke to Keeney's principal, Francis Phillips.
So the Africa Free Trade Area, or Agreement as it is commonly known, aims to promote intercontinental trade through the removal of local trade barriers, with the ambition of shifting us from the 15% of intercontinental trade that we see today to 30% by 2030, which is still a long way away from the 50% intercontinental trade that we see in other parts of the world. So it's really a tool that has been employed to help promote this intercontinental trade. And what this practically means that instead of sourcing some of our goods from internationally, let's say from China, a garment, we source those goods locally on the continent, therefore ensuring that, we are keeping the value within the continent and contributing to economic prosperity on this continent. So, of course, if you're doing this and creating the demand locally, it holds great opportunity for the development of localized supply chains and promoting local manufacturing, where we can produce these goods locally and specifically also beneficiate our endowments or our raw materials that we often see exported to other countries and then the final goods imported. So this does, create quite a big opportunity within the continent and allows us to also then build off this to actually develop supply chains that, if they are cost competitive, that can serve the export market and generate value in that regard as well.
And which industries are seen as the key drivers for this intertrade?
So there has been a few industries that have been identified, or maybe call it sectors that has been identified. And those are typically sectors where the African economy is already seeing quite a bit of value. So that's the automotive sector, the health sector. But then also importantly, there are sectors that enable other key African economies like the agriculture sector. So a very good example is there's recently been an intergovernmental agreement between Morocco, Ghana, Nigeria, and Ethiopia around local manufacturing of fertilizer. Fertilizer is one of our biggest imports on the African continent because it's so important to agriculture. And hence you can see these local collaborations or supply chains and value chains being developed to aid the economy. So fertilizer, health, manufacturing, and textiles are some of the core sectors that's being piloted within the Africa Free Trade Area at the moment.
And how are SMEs being supported as well to scale in order to take advantage or leverage on the opportunities that the free trade agreement is presenting?
So oftentimes the small or medium-sized manufacturers find that they don't have sufficient scale to really be cost competitive. And the second challenge that they often face is, of course, when you're a smaller scale player, is that the level of standard may be perceived not to be sufficient for export or intercontinental trade. So what is quite important in enabling these smaller players to also partake in the Africa Free Trade Zone, as we call it, is to have these collaborative or cooperative type setups where you have a industry body or an aggregator of supply that can actually bring together a number of these small manufacturers to, one, ensure that they have guaranteed offtake, two, help standardize the level of quality, the standards that they manufacture at, but also three, to help them secure funding, because a big part of securing funding is showing that you have a guaranteed offtake and that there's very little risk in the business. And we've seen this model deployed, especially in a country like Kenya, in the tea sector, where they've taken around 600,000 smaller scale farmers that they've brought together to stimulate around 54 tea manufacturing hubs that can then serve the African continent, but also the export market. So there is this need for collaboration if we're going to see the smaller scale sector or the smaller scale players meaningfully participate and benefit from these types of agreements.
And how can AfCFTA be used to attract foreign direct investment flows into the continent in supporting the manufacturing sector?
So ultimately, when investors are looking to come put investment in the country, especially in the economic hubs that we've created, what they are looking for is guaranteed offtake, A, and B, limiting their risk. So I think that a mechanism like the Africa Free Trade Agreement stimulates that demand that can attract an investor, and also through the removal of barriers, like, for example, tariffs and all of these elements that often deter international companies of investing in Africa, it actually gives them more comfort around the risk associated with their investment. So it's quite fundamental to the enablement of foreign direct investment in the country through, one, securing demand, but two, also removing some of these barriers that often foreign investors face when coming into the local context.
That was Mabo Buloka there, focusing on the Africa Continental Free Trade Area with Keeny's principal Francis Phillips. This on the backdrop of the manufacturing Indaba, which is currently taking place in South Africa. It's gone exactly 29 minutes after 4 p.m. Central African time. Still on the agenda for you in the next 30 minutes, or at least within the next 30 minutes, we'll be looking at the risks and the financial risks of riots for communities as well as businesses, and we'll be joined by APSA's investment strategist as we look at the latest from the markets desk. What do you have to say? Your insight on the stories that we've got in store for you. You'll find us on X, Instagram and YouTube at Channel Africa 1, and on Facebook we are at Channel Africa. If you've got any stories that you would like to share, stories that you believe would be of interest to our listeners both on the African continent and in the diaspora, do send us an email to newsroom@channelafrica.co.za. It's gone exactly 4:30 p.m. Central African time as we head over now to the markets desk, where Nosipho Zuma is standing by with your latest market indicators.
Business News on Channel Africa. The African Perspective.
Thank you, Thami. Good afternoon. In your business indicators this hour, $1 is trading at 17.86 in South Africa. In Botswana, is trading at 13.25. In Namibia, it is trading at 17 Namibian dollars 865. The Zambian kwacha is trading at 23 kwacha 06 to the US dollar. In Kenya, the dollar is trading at 128 shilling 58. In Ethiopia, it is trading at 137 bir 25. In Uganda, it is trading at 3,000 shilling 565, and in Tanzania it is trading at 2,000 shilling 600. $1 in Nigeria is trading at 1,000 naira 529. In Egypt, the dollar is trading at 49 Egyptian pound at 398. In Tunisia, it is trading at 2 dinar 897. In Algeria, it is trading at 129 dinar 39. In Morocco, the dollar will cost you 8 dirham 927. In Angola, the dollar is trading at 912 kwanza, while the Congolese franc is trading at 2,866 to the US dollar. Now looking at commodities, gold is trading at $3,324 and platinum at $1,381 per ounce. The price of Brent crude oil is at $68.13 a barrel. Now, for any business news stories you would like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +27 11 714 4459. For Channel Africa Business, I'm Nosipho Soma.
Business news on Channel Africa. The African perspective.
And for the business of sport, here is Figile Lingwati.
Sports on Channel Africa. The African perspective.
Thank you, Thami. In our sports business, we begin with football news. U.S. Major League Soccer players landed additional compensation for their participation in the FIFA Club World Cup. The players' collective bargaining agreement had stated players would receive 50% of all money that came in from outside tournaments, but kept it at $1 million. The players stood to make much more, as FIFA paid out $1 billion in total prize money, including $9.55 million to CONCACAF teams just for participating. The league will pay a 40% increase over the previous $1 million cap to each team that competed: the Seattle Sounders, Los Angeles FC, and Inter Miami, as well as 30% of performance prize money uncapped. Clubs received $2 million per win and $1 million per draw from FIFA, while Los Angeles FC also picked up $250,000 for winning a play-in round against Club America to fill a spot in the 32-team field vacated by Club Lyon. And South African Sports Minister Getty McKenzie, together with Deputy Minister Peace Mabe, tabled their department's budget in the National Assembly in Cape Town. They presented a budget of $503 million for the 2025-2026 financial year, and several members rejected it. In the 2024-2025 financial year, the budget allocated by the Department of Sports, Arts and Culture was slightly lower than what was tabled for the new financial year. To maintain South Africa's success on the global stage and keep athletes on par with the best in the world, the bulk of budget has been allocated to sport and development. And McKenzie allocated $32 million to sport federations in the country.
The department has a budget of $6.3 billion over the 25-26 financial year. Under Program 2, Recreation, Development and Sport Promotion, we are allocating $1.2 billion. To keep supporting sport in our country, we'll be allocating $98.5 million towards federation sport.
Despite all the criticism, McKenzie says he also won't back down on his support for the Formula One Grand Prix in the country. He says South Africa has hosted successful major events in the past, and there's no reason why it shouldn't bid to host a Grand Prix in the near future.
I stand here today to tell you that the FIA, the FIFA of motorsport, has given the green light for the upgrading of the track. We've had multiple meetings with the management of F1, with a crucial one happening in the next 2 weeks. To those who say the country can't afford to host the F1, I'm saying the country can't afford not to host the F1.
It was also revealed that the department has got a budget of $352 million for the 2025-2026 financial year, with the $72 million of the funding allocated to recreation development. McKenzie also revealed that there's progress on the bid for the return of Formula One to South Africa, with more development expected in the next 2 weeks.
Formula One has different processes in order to host a Formula One. I'll say there's 10 processes for the sake of explaining this better. We are at process 6. We have now put in our bid. They know about us. They now saying we've got a track. They are saying that we are the bid committee. The FIA has said we are ready with your track. We are giving you the green light. The FIA is the FIFA of motorsport. We're giving you the green light. We are now meeting them in 2 weeks, where we will then sit down and see a very important meeting. What is it they would want to see us do before they give us the green light? I must say the people of Formula One have been very professional in how they've dealt with Africa and South Africa in particular.
Last month, Sasol announced that it's not renewing its sponsorship of the women's national football team Banyana Banyana. That brought an end to a 16-year-long partnership and placed the South African Football Association under renewed financial pressure. And it was something that was highlighted by the chairperson of the Portfolio Committee on Sport, Arts and Culture, Joe Megluwa.
I want to talk to you about SAFA's financial crisis, mismanagement and millions that has gone just wrong. Despite bailouts, their inability to cover basic expenses like salaries, food and transport.
For any sports stories you'd like to share with us, please do send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Figile Lingwati.
Sports on Channel Africa. The African perspective. Africa in business on Channel Africa.
Thank you to Figile Lingwati as well as Nosipho Zuma. They bring us to exactly 4:38. Now we turn our focus now to what SASRIA has called part of its 5-year strategic plan. SASRIA, being South Africa's leading special risk insurer, has made use of cutting-edge data analytics to predict unrest, identify risk hotspots, and also to help mitigate crises before they actually escalate. This is in light of the growing economic uncertainty as well as the social unrest in South Africa. The insurer says that the data-driven approach will help in protecting businesses as well as communities from the financial fallout of riots as well as strikes. To give us greater detail on this, we joined on the line this afternoon by Muzi Dladla, SASRIA's Executive Manager for Stakeholder Management. A very good afternoon to you, Mr. Dladla. Welcome to Africa in Business. Tell us a bit more about yourselves as SASRIA, what it is that you do.
SASRIA is an insurance company that covers catastrophes in South Africa. So social unrest, civil unrest, as well as civil commotion, riots, strikes. But most of all, we are known for covering terrorism. So all of the risks that the private sector does not have an appetite to do, so SASRIA is responsible for that. So you'll remember in July 2021, we were the ones who covered all of those damages. So our risk really is to look at the risks that are of catastrophe nature.
So do you cover businesses, individuals, organizations, governments?
Yes, we cover pretty much the entire South Africa, because in the insurance legislation, to cover the risk that we cover, it's actually outside of the normal traditional insurance. So they are not allowed to cover that because it's risk that is just too big for their balance sheet, as well as the margins are quite small as well. So SASRIA then takes care of all of those. Governments, all businesses, multinationals, including your individuals, really, for your own vehicles and property and everything else.
I mean, granted, because whenever you try to take out any sort of insurance, they will categorically highlight that, national unrest, war, all of that is not covered. And that's the game that you play in. And I'm going to try and take you outside of South Africa for a moment. Are there similar businesses such as yours around the African continent that cover what you cover?
Yes, in the world, actually. Incidentally, in May, we hosted the very first in South Africa. So there's an international organization that is called IFTRIP. So all the pools of all the world, really, from the US to Europe to Australia, we gather, and all we do is we do the very same risks that we cover. All the various countries do that. I think in the South African continent, Namibia was also represented there. So there are very few in Africa. I must say South Africa was the first one to do this, whereas other countries, the private sector really takes the cover that they can, but there's no capacity for it because it's just too big, the risk for private sector to take care of it.
No, certainly the risk is really high. Talk to us then, Muzi, about the role of predictive technology and data analytics, what role they play and how they've changed or are changing the game for the likes of yourselves.
Great. So SASA hadn't had really the biggest risks in the past. So we had risks and we had unrest and all of that, but we never had one to the same extent as what happened in July 2021. So there are two things that we needed to do. The first one is we needed to start investing in social sciences and psychology as well. So we are appointing psychologists, for an example, so that we can understand the behavior of the individuals that we are insuring. Because remember, we insure the behavior of individuals who are disgruntled. So understanding their behavior is one of the key things. And then we also then use technology, such as artificial intelligence, machine learning tools as well, so that we can be able to use that as an aggregate shifter in terms of predicting and understanding how the behavior might turn out so that we can be able to then take the data of what we have and overlay it onto a map over the number of days that it took to have all of the damage that we have. And then we use that to superimpose it onto our mitigation. So we have the army, we have the police, we have communities, and we have policyholders. So if we know, let's say for the next 10 days, what the sentiment is and what people are saying, and we triangulate that with other data sources. For an example, we have developing some apps where individuals in certain spots could feed information to us, social media as well, and other partnerships that we have with the private sector where they give us data, and then we put that onto a map, and then with a high certain level of degree of correlation, we can tell you, even if we go back to July, we can tell you that at this time, this is what people are saying, and the number of claims are correlating with that. So definitely the models are working, and we now can have insight. So it's no longer a case of thinking and waiting for things to happen. We know what's going to happen before it happens, and then it's all about what mitigation to put in place to ensure that when that happens, you are ready to minimize the impact of the exposure, really.
I'm thinking about the issue of timing here and real time in the sense, do you have enough time to put in place those mitigating measures? Because it's really about measuring the temperature, as you said, of the psychology of the individuals and how likely they are to actually start breaking out in riot. How do you close that gap? How do you make sure that you're there before it actually happens and you're able to mitigate before it's too late?
So it becomes easier if you model it. So because if you just decide to act without having a system that guides how that works, it's very difficult. So we have a 4 levels defense mechanism that we've put together. So it looks at individuals. And at that individual level, when we know what's going to happen at any given time, for an example, I give you Sandton area, which is one of the most expensive square mile in one spot. So when we know that something is going to happen in that space, maybe 10 days in advance, so we have risk alerts and location-specific warnings that we send out. So we also then can inform those policyholders and give them what we call not just early warning systems, but what we call imminent danger cover, where we can utilize security in that area to channel the protesters. Because it's easy with protesting because there are migration patterns of how people move. In other words, people from Alexandra, for example, to get into Sandton, there is a particular path that they would need to move towards. So we know that up front, and we can obviously direct and channel and move around, because remember, protest is a constitutional right. People have a right to protest. It becomes a criminal act once it escalates into violence and destruction of property. So it needs to be handled with delicacy. And then the second part, our community leadership, as well as taxi industry, for an example, being utilized to help shape and move that around. But the most important part, which I just have to cover briefly, is the policing and police stations. So we have on a map of all police stations in South Africa, we know where they are. We know we've mapped the radius around within which they can be able to cover, and we know how many people work there, and we identify gaps where maybe some might not have training in how to manage crowds and things like that. So once you have a system that works that way, and then ultimately the army comes much later. So we having the information, sharing it with the state, and the coordination of the deployment at particular hotspots then becomes easier if there's a system that does all of that behind the scenes. And lastly, we even have modules where, for example, in KZN, if people are talking about what's going to happen, they say all of that in Zulu. So we have modules that learn and translate language into English and then into machine language. Then we can be able to consolidate that. It becomes easier. It becomes a click of a button rather than having to listen to all of these things and coordinate yourself.
Right. So let's focus on what the end result is. What are the objectives of all the data that you carry? Yes, you've mentioned the early warning systems in order to alert businesses as well as communities and even the authorities of imminent danger. But what would you highlight as your final objective, your ultimate objective of the work that you do?
So remember, ultimately, we are an organ of the state. We exist to fulfill a mandate. So our mandate says, one, we need to be the ones that come up that advise government on risks of national importance. So the risks of national importance are the ones that cannot be predicted, and if they are predicted, they are very big in terms of like a fiscal pressure. So those are natural catastrophes, which we're not talking about today, but we're talking on the social side of things. So obviously, resilience and economic reform go hand in hand, and our job is to ensure that the state does not necessarily always have to relieve afterwards. So ex post financing, we're mitigating against having to keep huge funds of money that are sitting there in government and they are waiting to relieve whenever there's a disaster. We're creating an ex ante mechanism where before the event you take a fraction of that cost, you buy insurance at a level that we can manage, and therefore we're balancing that so that the opportunity cost of funds being kept at the fiscal level can be utilized for other things. So we are a mechanism for the state to make it easier and create resilience and have I would say an additional level of capital that sits outside of the fiscus that can be able to take care of South Africa like we did in July 2021 when we paid out 32 billion rands worth of money back into the economy.
Muzi Dladla, thank you very much for joining us this afternoon. Certainly very fascinating insurance conversations, the very high risk on national and global stages. We thank you very much for your insight and your time this afternoon. That's Muzi Dladla, SASRIA's Executive Manager for Stakeholder Management at SASRIA. He takes us to exactly 4:48 Central African Time.
Stella Longwe, Pamalonje.
Palitu soko mapano pamalonje. Kumvera nyimbo za mu Afrika, kusangalala, kupeza moyo. Akuti kumva moyo kuti kuyenda bwino. Pano pamalonje. Ndiyetu apa tindikatswiri oyimba ameneyu ndikatswiri wa dziko la Malawi amene akukhala dziko la South Africa. Ndipo amayimba amene akuti ndi Big Nick Malawi. Yatusati kuti kodi moyo wanu woyimba ukuyenda bwanji mu Johannesburg?
Moyo woyimba ukuyenda bwinobwino kwambiri. Chiliyonse chikutheka ndithu bwinobwino.
Ayi, aziwoneka chiliyonse chikutheka mofa magrasi anu apa mwaka. Akuti kumenya yonse. Aziwoneka zoti azikutheka ndithu mu Johannesburg.
Malonje, pa nthawi ya 6 koloko kufikira 7 koloko madzulo. Lowiruka ndi Stella Longwe. Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Let's take a look now at the latest business and financial market developments. And for this conversation, we're joined by Henri Brink, the investment strategist at Absa Investments. Good to have you with us on African Business, Henri. Welcome.
Good afternoon.
Perhaps let's start off by unpacking the latest performance of both global and local markets.
Sure. So local markets are looking fairly flat so far today. So financials and industrial showing moderately positive performance, but we are seeing a bit of a pullback in resources, so extending those losses from yesterday. Of course, if we look at it a bit over the longer term, we have seen very decent performance from the local markets here to date, and majority of that has been driven by the resource sector. Then globally, performance looking quite mixed. So we saw the US S&P 500 closing in the red yesterday. In Europe, Euro Stoxx 50 also edging lower, but the FTSE 100 in the UK is up slightly. And then we're also seeing some of the Asian indices under pressure.
And let's take a look at the latest trade tariff developments and how they are impacting the markets, if at all.
Yeah, we've seen quite a few tariff announcements over the past couple of days as countries across the globe are, of course, attempting to reach deals with the US. So the latest development is the announcement of a deal between the US and Indonesia, where initially the US was proposing a 32% tariff on Indonesian goods, but you've seen that now being lowered to about 19%. And then earlier in the week also saw the US president imposing a 30% tariff against the European Union as well as Mexico. So expecting the next few weeks to continue having quite a bit of uncertainty, and we're expecting to see a few more tariff announcements coming through.
The deadline or the dates of implementation is looming, being the 1st of August. Are we likely to see more volatility up until then?
I think markets are definitely remaining quite cautious ahead of some of those announcements. So definitely expecting quite a volatile period going forward.
Now, the earnings season is currently underway in the United States. Any results that you would like to highlight regarding that?
Sure. So the big banks were the first to report in the US. On aggregate, we've seen both earnings and revenue beating consensus expectations across most of those banks. We saw Bank of America being the only counter to then miss some of those revenue estimates. And then aside from the banks, on the tech front, we also saw an earnings release from ASML, which is, of course, a chip company. So that they did post a beat both on top and bottom line. But then in terms of guidance for the year ahead, we did see that being revised lower, and management also then highlighting a lot of uncertainty around the outlook into 2026. So that resulting in a bit of a negative share price reaction.
And economic releases coming up this week?
So we've seen quite a few coming through this week already. First one was the second quarter GDP numbers coming out of China. We did see the economy growing by 5.2% on a year-on-year basis and coming as a slight positive surprise to markets. But of course, seeing that growth tapering off a bit from the first quarter's print. And then also saw some inflation numbers across the various global economies. So in the US, we saw that headline print coming in at 2.7% year-on-year, which is, of course, an uptick from the prior month, but came in more or less in line with market expectations. And then in the UK, we saw that inflation print accelerating to about 3.6% on a year-on-year basis, so coming in higher than what markets had expected, and also continuing to move further away from the Bank of England's 2% inflation target.
And what can the markets expect for the remainder of this week, both globally and locally?
It's quite a quiet on the data front for the remainder of the week, but then into next week, we'll be seeing some local inflation numbers for the June period, which we are looking forward to.
All right. Thank you very much, Andrew Brink, for today's latest business and financial market developments. Have yourself a great one further.
Thank you.
Thank you. That's Andrew Brink, investment strategist at ABSA Investments.
Stay ahead with Africa in Business, where Thami Ngubeni unpacks your go-to source for Africa's economic trends and development.
It is exactly 4:54 Central African Time. South African rail, port and pipeline company Transnet's confidence has received a boost as a major mining company has announced it plans to sign a long-term manganese transportation contract with the parastatal. The deal with UMK appoints Transnet as its rail transporter of manganese from its mines in the Northern Cape to ports for export markets. UMK is the first major miner to sign the Manganese Export Capacity Allocation 3 agreement. Transnet's Chief Business Development Officer, Yolisa Kani.
This is the third regime, of the MECA contracting, which enables the exporting of our good grade of manganese. But most importantly, Transnet has just exited what we used to call a phase of trying to turn the corner. We are now in a new phase, which we call it reinventing ourselves for growth. So certainly signing a 10-year contract is a momentous achievement for ourselves and the teams that have worked so hard together with our customers to ensure that we get to this, we reach this milestone. So we're very, very excited. And again, it speaks to the sustainability of not just Transnet, but obviously it has an impact on job creation as well as the GDP of our country. So it's a big moment for us. UMK is one of the 16 customers on that channel. But to answer your question, this is happening at the back of a rail reform, as you probably know by now, that there is a new policy that allows new train operating companies to access the network for as long as they have cargo or they have been contracted by their own customers to transport the cargo for export. So we coming in at a very difficult time where competition has become real because we're no longer a monopoly. That's number one. Number two, the vertical separation of TFR it means that we now have TFR as a train operating company, but we also have TRIM, which is the infrastructure manager. That then enables a concerted effort in terms of the improvement on the network, which is the infrastructure that has been ailing for quite some time because of the backlog on maintenance. So certainly guaranteeing this revenue for 10 years will then ensure that, we make enough revenue to claw back on the maintenance backlog. So again, it talks to the things that we are also doing on the port side in terms of enabling larger volumes of export for manganese. And there is one particular, one of the many projects that I'd like to mention is one loop that we've created on that corridor that would ensure that the volume throughput is increased from the previous year. So you quite
some really encouraging news there for Transnet. That was Yolisa Kani, Transnet's Chief Business Development Officer. That takes us to exactly 4:57 Central African time as we wrap up Africa in Business for this afternoon. And we say bonjour to the French desk avec Joël.
Et je dis bonjour Thami, bonjour à tous les auditeurs de Channel Africa. Dans 3 minutes, c'est Vue d'Afrique. Il sera question du Rwanda, le délibéré sur le maintien ou non en détention de Victoire Ingabire. Et aussi en Centrafrique, les membres des groupes armés UPC et 3R font leur entrée au gouvernement. Mais encore, en Côte d'Ivoire, le dépôt des dossiers de candidature pour l'élection présidentielle du 25 octobre est ouvert. C'est tout à l'heure sur Vue d'Afrique. Merci, Thami.
Merci, Joël. That's Joël coming up with Vue d'Afrique. That's how we come to the end of this Wednesday edition of Africa in Business on Channel Africa. Thank you to our fabulous team on the news desk, Dwalani Tulengwape, economics desk, Nosipo Zuma, and for the business of sport, Figile Lingwati, our producer, Mabu Bulok, our technical operator, Catherine Maleka, as well as on social media, Nomalanga Butelezi. I'm Thami Ngubeni. This has been Africa in Business on Channel Africa. Heading over now to the French desk for your latest news and Vue d'Afrique. Au revoir.